our regular viewers will be aware of that last week and this week. We've asked our guests to come along with their top stocks that they would buy in a significant pullback. So we want to know what's on top of their list at the moment. Gary, what would you be picking if there was a significant pullback, or perhaps we went through some sort of major correction?
Yeah, I've seen a few of the other analysts talking about buying defensive sort of style stocks in a correction there, but really, if you do get a really aggressive sell-off and a crash, as you call it, what you actually want to be doing is actually buying some beta. So you want to buy the stocks that are actually going to outperform on the upside. So it's not that after the market's crashed, it's not the time to be buying sort of safety. It's usually trying to buy sort of maybe the high growth sort of stuff that's actually going to give you a bit of legs. So things like sort of Macquarie and even like a Janus Henderson. But I've sort of chosen gear here today, which is like a geared ETF. So if you really think you're at the bottom of the barrel and you've hit the low, then you really want to get a bit of beta. So I think the gear is a geared up fund. I think it's like 50 to 60% sort of geared up. So if the market rallied, say 5 or 10% off the lows, then you're getting probably double to 2.2 times that or something. So you're just getting a bit more leverage on a basket of the market.
Okay, so it's the hedge fund, the BetaShares Geared Australian Equity. Howard, what's your pick?
Yeah, well, the main thing that you want to look for if there's any sort of a crash is the kind of company that the share price drops a lot, but their competitors are weaker and are likely to go broke. Gary mentioned a very interesting thing, and I've noticed similarly, that if you go to the mall, some of the shops are still closed. Now, in all the years I ran a business, whenever one of our competitors closed, we opened a bottle of champagne and had a party. It's not bad news because your competitors go broke. It's actually very good news because it means their market share comes to you, or to you and the remaining survivors. So that's what you're really looking for. So the company that I've chosen is Credit Corp. Credit Corp tends to move very much more than the market moves. So when the market crashed in March, April last year, as an example, and the GFC was similar, its share price absolutely plummeted. It was about $34 before March, and it got down to $6.01. So it went down by something like 4/5 in that time. Now, it was the strongest company in its field, so it certainly wasn't going to be one of those that was going to suffer or go broke. Or if it suffered, it was only going to suffer very temporarily until its competitors went broke. Same thing again now. So Credit Corp, largely a misunderstood company, market doesn't really understand it very well at all, but a company with enormous potential to grow more rapidly because it's likely to lose even more competitors than it lost in March, April last year. So if the market really plunged a lot, Credit Corp would probably plunge even more than the market, and that'd be a great time to buy because everybody would be worried people won't pay their debts. But of course, being the strongest company in the field, they'll be the ones that profit the most out of it. So my choice would be Credit Corp.
Credit Corp from Howard. Okay.